In 2009, Taylor Swift bought one of her first properties. It was a condo off the end of Music Row in Nashville, Tennessee, in a luxury complex called the Analytical. The high-rise condo market has been kind of crashing lately, and I'm not exaggerating. Some of the high-rise condos have dropped more than 20 to 30% in the last 18 months, which makes me wonder, did Taylor Swift's condo crash? So in this video, I'm going to tell you what I think her condo is worth today and also give you a little insight into the high-rise condo market, because the last 5 years, what has happened in Nashville has been nothing short of bizarre. By the way, I'm a huge fan of Taylor Swift, and I like her music. I think it's great, but I'm talking about her real estate purchases. She's very savvy. You see, she purchased a 6-acre estate in 2011 in Forest Hills, just south of downtown. And I love this property. Not because she bought it for $2.5 million, which was $500,000 less than list price. That's a 15% drop from list, which shows that she's very savvy, or she has someone negotiating that's got some major skills on her team. That's actually not what I'm talking about. It's that 6 acres in Forest Hills today, just the land alone would go for well over $1 million an acre. That means this property is $6 million before even valuing the house that's on it. However, this isn't about her home purchase in Forest Hills. This is about her condo purchase on Music Row. Has it crashed in value, and what's it worth today? Because believe it or not, the median price for condos have been flat for the past 3 years. So how can I say that condos are crashing? This is where it gets kind of bizarre. You see, in order to understand what's going on with her property, we need to understand what's going on with the high-rise condos. And in order to understand what's going on with high-rise condos, believe it or not, we have to talk about Adam Neumann. That's right, the WeWork CEO that crushed a company and left a billionaire. That guy. And we need to go back to 2021. At the time, Nashville was one of the hottest multifamily markets. I mean, everybody wanted the same thing: luxury apartments.
Well, Neil, there's no surprise here to anybody when I say cranes continue to pop up everywhere, all over the Nashville skyline. And this is showing that the construction permit record really is crazy. For the first time, the city has surpassed $5 billion in value of construction permits.
By December 2021, when inflation was raging at 7%, Neumann and some investors bought 2010 West End for $159 million, thinking that rents would only go up. He bought it at a 4 cap, which means that he just expected a 4% return on this property. Now, the only reason you would buy a property like this at 4% return in 2021 is because you expect rents to go up, expenses and borrowing costs to stay flat. And the exact opposite happened. Rents started to decline shortly thereafter because he wasn't the only one that wanted a luxury apartment building. In fact, there was one of the greatest luxury apartment booms in U.S. history, and Nashville was one of the greatest apartment booms in the nation. It was massive. There were at one point 24,000 units under construction and 13,000 apartment units delivered in 1 year. Now, in a market where 4,000 to 8,000 additional rentals are absorbed every single year, this created a massive supply glut. And that's exactly what happened. Rents started dropping. Adam Neumann and their building at 2010 West End realized that not only are rents not going up, they're going down, but their insurance, their maintenance, their management, their borrowing costs are all skyrocketing. What they thought would be a 4% return became a complete money pit, and they were literally spending more money every single month. And just a couple of months ago, they sold it for $112 million at almost a $50 million loss. But what does this have to do with the luxury condo market? There were so many new builds of apartments that some apartments decided they would pivot to condos. And this is where the Gulch became ground zero for this. There are 2 buildings right now that I know of that are converting to condos. the Emery and the Pullman. They were originally set to be apartments, but realizing the competition and realizing the trajectory of rents, they just decided they could probably sell and make more money as condos. Here's the problem with that. There are only a few hundred to maybe 500 high-rise condos that sell every year in Nashville. And I'm not just talking about the whole condo market, just the luxury high-rise condo market. See, this is where Greater Nashville can report that the median price on condos has been flat for 3 years, and at the same time we can see buildings losing 20 to 30% of their value. Even the lowest price high-rise condo sits above the median condo price. And the Emery and the Pullman alone are over 600 units. But see, that doesn't even include what's on the MLS. In fact, if we look at just the MLS, you can see that there are over 240 active listings, and yet only 219 have closed in the past 12 months. This has created a perfect storm, and what has unfolded has been nothing short of spectacular for buyers. I mean, it's been in free fall now. If you can buy a brand new condo in a brand new building for less than what buildings that are 10 and 15 years old are going for, of course that's a much, much better deal. And that's what's created the free fall. When you think about what a condo should be worth, it is kind of hard to value it. And there's really only 3 ways you can value any kind of property. You can look at it based on what others have sold for. That's called comps or comparables. You can look at it based on what it would rent for and how much you could make. That's called the income approach. You're essentially buying earnings at that point. And then there's another way. It's called cost to build. Now, condos in the past have traditionally not made sense from an income perspective, at least from my experience in Nashville. And I explained this in one of my most viral tweets. You can have a monthly payment of $4,000 to $5,000 a month, and yet you would only get about $2,500 or maybe even less in rent. That's crazy. But if you look at it from a comparable perspective, and a lot of times people want to buy one and they're able to sell it for more than they bought it for later because it just becomes a store of wealth. And this can be dangerous because it's known as the greater fool theory, where you just always expect that someone will pay more than what you paid for. And that works until it doesn't. But you do have a lot of wealthy second homeowners that choose condos because they don't want to maintain where they live. They just want a nice place they can go, that they can own, that they can walk into with their own furniture. It's a second home for them. And so that's what the condo market, a big chunk of it is. But let's consider the third way to value properties, and that is cost to build, or replacement cost. Sam Zell was a famous commercial real estate investor in the 80s, and he became famous for buying below replacement cost. His theory was that it was one of the most reliable ways to value properties. And I actually think that this is the most interesting, because I think that we may be seeing in Nashville, some of the condos are now starting to go below replacement cost. Now, I'm not a developer, but let's just look at the Pullman. And we can see that they pulled a $130 million loan. And if you just do simple math, and they have 300 units, that's $430,000 per unit. Now I know some of these are larger and some of them are smaller, but my point is the simple math is showing that some of these condos are selling for less than $400,000. And yet we know that the average cost for all the units would be $430,000. We also got to consider materials and labor have only gone up since the Pullman was built. Now with the steel tariffs and the push for increased labor cost, the likelihood of costs continuing to increase is very high. This means that the current prices falling below replacement cost will restrict supply in the future. So I do think replacement cost is a very interesting way to value condos. But how does that relate to Taylor Swift's condo in the Analytical? Well, we have so many listings that even the Analytical has experienced price pressure. Being right against Vanderbilt and right at the edge of Music Row hasn't helped. One of the problems is it is almost 20 years old. And with all of the pressures the condos have been facing, along with Broad West being right on West End and just down the street at the Gulch with the Pullman and the Emery, they've been hit hard too. But that leads me to what's happening with her condo. You see, there's one part of the condo market that's actually been performing quite well, even as supply has been raining down like it has never rained before. And that is the penthouse, the luxury of luxury, the most expensive condos you can find. In fact, Nashville just broke a record for the most expensive condo sold when the Raising Cane CEO, Todd Graves, spent $15 million in 4 seasons to buy a record-breaking property. He was followed by Tony Geritana, who just sold his penthouse in 505 for $10 million, and in Broad West, those were going for $7 million. So has Taylor Swift been hit by this quote-unquote value drop? I know she's not selling it. I know she's not losing money, but in my opinion, she has not. And the reason being is even in the Adelicia, the most expensive floors, one just sold for over $1,000 a foot. Remember, she bought hers for $2 million. If we use that comparable, hers would sell today for about $4.3 million. Now, before you think it's a home run because it's doubled in value, there is a cost to owning these, and the HOAs are higher. The property tax is pretty high. She's probably spent about $750,000 owning it just in those 2 expenses alone. And with the inflation calculator, a $2 million purchase would be about $3 million today. And with the $750,000, she's maybe made 10% on her money. It's not the same as her Forest Hills purchase, but she's basically lived and owned one of the nicest condos for 15 years for free. And that's pretty cool. So even though it's not the Forest Hills purchase, I think she did pretty good. Thanks for watching, and I look forward to seeing you next Saturday. Thanks a lot.